Welcome to the deep dive. Today, we're zeroing in on something that affects pretty much all of us who use banks or credit unions' customer experience, CX.
That's right. We're looking at how financial institutions treat their customers and how that's, well, not just about service anymore, but really tied to their revenue, their bottom line.
Exactly. And the big question we want to unpack for you is, how can these places, the big banks, the smaller credit unions, actually use CX to grow? And maybe more importantly, what can you learn from what they're doing or maybe what they should be doing?
Yeah, definitely. And what we're drawing on today is a pretty detailed analysis that looks right at that link between CX and revenue and financial services. It pulls together recent trends, some really interesting examples too.
And it's not just theory, is it? Like the analysis pointed straight to a recent Bank of America report. They actually said, didn't they, that CX improvements were driving revenue growth.
They did, which right off the bat tells you this is tangible stuff. It's having a real impact.
Yeah. And I bet listening to this, you can probably think of a time you felt that friction dealing with your bank.
Oh, absolutely. Long waits on hold, maybe, or having to repeat yourself over and over.
Ugh, yes. We're getting bounced between departments. We're going to dig into why that still happens and, crucially, how things are, or maybe should be, changing.
So our mission today really is to cut through some of the noise and get to the core of how financial institutions are thinking about your experience, or how they ought to be thinking about it.
It's changing fast, this whole area. We want to give you a clear picture of what's going on and why it matters to you.
Okay, so let's start with that basic connection then, CX and revenue. You
Yeah.
mentioned Bank of America. It really feels like CX has moved from just, the support department job to being a real growth driver.
It really does. But the flip side, according to this analysis, is pretty stark too. Some worrying numbers about bad CX, right?
Yeah, very worrying. It mentioned that overall banking CX quality in the U.S. has actually dropped for 3 years running.
Dropped. That's surprising with all the tech focus.
It is. And the fallout from that, the analysis suggests about 1 in 5 customers will actually leave their bank or credit union because of bad experiences.
1 in 5. That's huge potential loss.
It is. And it gets worse. Apparently, something like 64% of people are ready to jump ship after just one bad interaction.
Wow. Just one. That's incredibly sensitive.
It shows how little patience there is for poor service now. And maybe the most telling stat, over half of the customers surveyed weren't even sure if they'd stick with their current bank in the next year.
Over half. That sounds like loyalty is really fragile, which, like you said, hits the bottom line hard.
Definitely. So, okay, bad CX hurts, good CX helps. We get that. But why are people still getting frustrated? The analysis really points to this idea of high effort.
Right. Customers feel like it's just too much work.
Exactly. Even with all the apps and websites, it still feels like hard work sometimes. And this analysis introduced a term, FOR,
FORO. That's a new one on me. What's that?
fear of reaching out. Apparently, a Zingli survey found 71% of people feel that contacting customer service is as stressful, maybe even more stressful, than the actual problem they had in the first place.
Wow. 71%. That really hits home. The cure is worse than the disease kind of thing.
Pretty much. You
Ugh.
sort of tense up before you even make the call, right? Expected the wait, the repetition, the transfers.
Yeah, you brace yourself for an ordeal.
Exactly. And, while we've seen this huge shift to digital mobile banking especially,
Wait, that's massive now.
yeah, over half of customers use mobile apps as their main channel. That's up 18% in just 3 years. And they're interacting, on average, over 150 times a year through that app.
Ooh, 150 times. That's
Yeah.
that's a lot of touch points, a lot of opportunity.
Or, like you said earlier, a lot of chances to mess it up. 150 chances to build trust or break it.
Yeah.
And the analysis was a bit critical here. It suggested some institutions jumped on automation mainly to, cut costs.
Ah, right. Without maybe thinking enough about the customer side of it.
Precisely. If you just put up bots to deflect calls, but they can't actually solve the problem efficiently, well, it can backfire.
Yeah, that just adds another layer of frustration, doesn't it? Press one for a robot who can't help you.
Exactly. Which naturally leads us to look at who's getting it right, or seems to be. The digital players, the neobanks. The analysis used Revolut as a big example.
Revolut, yeah. They've grown incredibly fast. Over 35 million users now.
Yeah. And a big part of that seems to be their focus on CX.
So what are they doing differently? I mean, they started with currency exchange, right? Now they're this huge global thing.
Well, a few key things stood out in the analysis. First, 247 support, but crucially, in the app.
Ah, okay. So convenience, accessibility.
Huge. Help is right there whenever you need it. No digging for a phone number, no waiting for office hours. It kind of breaks down that old banking barrier.
That immediate access must be really appealing. If you have a problem, you want it sorted now, right where you are.
Exactly. Second thing, smart personalization. They use your data, your spending habits, to give you tailored stuff like real-time budgeting tips or rewards linked to where you actually shop.
So it feels less generic, more relevant to you.
Right. It makes you feel like they actually, see you as an individual. And third, transparent design.
Meaning,
Just clear information, fees, transaction history,
yeah,
everything's easy to find and understand. It reduces what the analysis called cognitive load, basically less mental effort needed from the customer.
makes sense. No jargon, no hidden clauses, builds trust.
Totally. So the big takeaway there is that for companies like Revolut, great CX isn't just a nice to have, it's literally their competitive edge.
Okay, so if that's the benchmark, what can the more traditional banks and credit unions learn? How do they build that kind of customer-centric model?
Well, the analysis laid out some key ingredients. It needs to be personalized, like Revolut. It needs to be truly omnichannel, seamless across all touch points. It absolutely needs human backup when things get tricky.
Mm.
And it needs to use AI smartly.
Right, let's unpack that a bit. That blend of automation and human touch seems really vital, especially given what you said earlier about people not fully trusting AI with complex money stuff.
Absolutely vital. The numbers were stark, weren't they? Only about 25% trust AI for big financial decisions. And, maybe more critically, over 60% said they'd ditch a brand entirely if they couldn't reach a human when needed.
Wow. So you absolutely cannot just rely on bots. You need that human safety net.
You do. It's about finding the right balance. Automation for the simple, routine stuff, yes, but a really clear, easy path to a person for complex or sensitive issues.
And the analysis mentioned things like smart escalation.
Yeah, that's the idea where a chatbot can smoothly hand off the conversation to a live agent. And this is key. It passes along the context. So you don't have to start all over again.
Oh, thank goodness. That's one of the biggest frustrations.
Isn't it just? And then there's Agent Assist, where AI tools actually help the human agent. They can summarize past conversations, pull up relevant info quickly, making the human interaction more efficient.
Okay, so the AI makes the human agent better, faster. That sounds like a win-win.
It really does. Then the second big piece was that unified journey across channels, omni-channel.
Right. So my experience on the app should feel connected to the website, the call center, even going into a branch.
Exactly. Consistent feel, consistent information. Imagine starting, say, a loan application on your phone, then later picking it up with an agent online, and they know exactly where you left off. No re-explaining.
That sounds like the dream, because we've all been there, right? Start online, have to call, and the person on the phone has absolutely no clue what you already did.
Ugh, yes, so frustrating and inefficient. That's why the analysis talks about needing centralized data hubs, basically one place where everyone can see the customer's history.
So the different departments aren't operating in silos.
Exactly. And that enables what they call omni-channel orchestration, letting you switch channels smoothly without losing your place or repeating yourself.
Okay, a fluid experience.
Yeah.
The bank knows your journey, however you choose to connect. That makes sense.
And the third element was about using data proactively, not just reacting when a customer calls.
Proactively. How does that work in practice, using all that transaction and app data?
Yeah, exactly, using predictive analytics. So the system might flag an account that seems at risk of closing, or identify a customer who might be a good fit for a particular savings product, or even guess when someone might need support before they even ask.
Interesting. And then,
And then you can use personalized nudges, tailored messages,
yeah.
maybe investment tips based on saving patterns, or gentle reminders about building credit if someone's missed a payment.
So it's using data to offer actual value and anticipate needs. That feels like a big shift from just processing transactions.
It is a big shift.
Okay.
And it links directly to thinking about CX not just as a cost center, something you can spend money on, but as a profit center.
Right, because happy customers stick around longer, buy more products.
Exactly. They're more likely to do cross-sell, upsell. Their lifetime value, LTV, goes up because they don't churn. And they tell their friends, brand advocacy, good net promoter scores. It all drives growth.
But okay, the analysis didn't shy away from the challenges for the traditional players, did it? It's not easy for them.
No, definitely not. Big hurdles. Legacy IT systems are a major old tech that just wasn't built for this kind of seamless modern CX.
Yeah, I can imagine trying to bolt AI onto systems built decades ago.
Right. Then there's regulatory complexity. Financial services are heavily regulated, which can sometimes slow down digital experiments. And data silos, again, different parts of the bank holding on to their own data, not sharing it effectively, that kills any chance of a true omnichannel view.
So real structural, technical, and even cultural barriers.
Absolutely. But the analysis suggests it's not impossible. The recommendation was often around incremental innovation.
Meaning, start small.
Yeah, maybe layer AI onto part of the system first.
Right.
Or pilot a new CX approach with just one customer segment. Test, learn, refine, then scale up, rather than trying a massive, risky overhaul all at once.
A more agile way to modernize. That sounds sensible. Now, you mentioned technologies earlier. What are the key ones powering this next-gen CX?
Well, AI platforms for support are huge, obviously handling simple stuff, assisting humans. Then customer data platforms, CDP is crucial for getting that single unified view of the customer across all channels.
That 360-degree view everyone talks about.
Exactly. Behavioral analytics are key too, understanding how customers are interacting in real time and responding. And things like voice AI are making phone support quicker and hopefully less painful.
But again, the analysis stressed it's not just about having the tech, right?
No, not at all. It has to be deployed with empathy, with transparency, with a real focus on making the customer's journey better. You can have the fanciest AI, but if it just creates new roadblocks or feels creepy, it's counterproductive.
Got it. So looking forward then, the big picture, where's this all headed for financial services CX?
The main conclusion from the analysis is pretty clear. Customer experience is the new competitive battleground. It's the competitive moat, as they say.
Especially in finance where trust is everything.
Precisely. Customers increasingly expect banks to be responsive, to respect their time, to actually seem like they understand their needs. It's moving beyond just being a utility.
So for the traditional banks and credit unions, it's more than just tech upgrades, it's a mindset shift.
A fundamental shift, yeah. The analysis argues CX can't just be one department's job anymore. It has to be embedded in the mission of the entire organization from the top down.
Okay, so let's try and boil this all down. What's the core message here for the institutions listening and for you, the customer?
I think the winning formula really comes down to a few things. Make it low effort for the customer, make it highly personalized, and blend the human touch with AI smartly and seamlessly.
Get those right.
And you get more loyalty, higher lifetime value for the bank, and just a much, much better experience for you, the customer. It's a win-win when it works.
So the key takeaway really is that financial institutions need to stop seeing CX as just service and start seeing it as a core driver of growth, which ultimately should benefit all of us using those services.
Absolutely. And maybe a final thought to leave you with. As CX becomes the central focus, think about how your own relationship with your bank or credit union might change. What new things will you start expecting from them in the future? Definitely something to mull over.